What's up, traders? Thanks for joining me this Friday. It is Friday the 13th of 2024. This may be my last live stream of the year. Depends on my holiday travel. And maybe my last live stream ever. No, I'm just kidding. I'm just kidding. But I do want to talk about some stress that's been afflicting me. And if you watch some of my YouTubes and my live streams, rather, I've expressed these concerns before about the crypto market. But that's not going to be the point of this live stream. The point of this live stream is to leave you guys on a teachable moment. I want you guys to, I really want to talk about volume profile because there's some great examples on Ethereum this week and last week that was a great trade that I posted on the Discord, and then a futures trade that happened today, as well as a stock trade with Eli Lilly, one of my favorite stocks. And so volume profile is something I basically discovered in 2024. So this is kind of like a recap of the indicator of 2024. Maybe that's what I should have titled this live stream. Or if I'm here next week, I'll do that. 2024 recap. And yeah, I just want to make a teaching video because of just how powerful and amazing it is. Yeah, we'll get into it. So if you're catching later, fast forward through the music, and if you're catching it live, hang out. I'll be right back. right. Welcome back, guys. As promised, I'm going to do a follow up on a video idea I did last week because I did this for live stream and I did it for, uh, yeah, for TradingView right here as well. Just because I wanted to give guys an example of my spike indicator as well as volume profile when they are combined. And it ended up being a double teachable moment because later on this week, Monday of this week, there was a big liquidation sell off in crypto, and that level 3506 held once again. And so people asked me on my Discord about it. Tell us more about it. And I got to use that as another example of how powerful volume profile is. It's like a cheat code. That's what I've said about it. And I discovered it through friends, through my trading community earlier this year. And I was very resistant to start using it as a tool because I felt that I had all the tools in my arsenal that I needed. I had 50% retracements, which I've used for literally over a decade, either by themselves or as a part of Ichimoku. And a 50% retracement is just very simply where I take a trend and I look for the middle, the halfway point between the major high and the major low, and very, very often price tends to respect that level. And so I did a lot of trading just based on that for years and years and years. And so that's all I felt like I needed. And so volume profile then became the method for me to add to that as well. One second, ladies and gentlemen. Hang on just a second. Hang on a second. All right, I'm back. The second is over. Okay. And so I added this indicator to my library, my lexicon of setting up trades, and it's really revolutionized my trading just in this year. 10 years, a decade on. And so I was able to find this as a tradable example on Ethereum about 2 weeks ago. And then what was interesting in this liquidation spike, like I said, from Monday of this week, it came back and hit that exact same level again. Let me start back over. Let me give it a refresh because I want everyone to know this and get it. And like I said, I'm going to talk a little bit more about my feelings about the cryptocurrency market once I get through this teaching. Okay, but I'm gonna go ahead and do a recording of this, and so yeah, we'll do that and we'll start over from fresh. All right. Whoops. Screen 2. And it's interesting that I can use OBS. I wonder if they just added that. All right. All right, what's up, traders? So I'm going to follow up on a video idea I published last week talking about Ethereum and volume profile, a trade that I took last week that worked out very well. And then if you were following the cryptocurrency markets this week, you likely noticed that on Monday, there was a big liquidation. Let me take off the indicators here so you can just kind of see for what it is. Like Monday this week, this is 30-minute chart, big old sell-off on Monday. What was really, really cool about this sell-off is that it still respected that volume profile level. And that is why I love this indicator and why I love this so much. So let me just do a little recap, and we're going to see where I got that from, why it's important, and also add to it why I don't trail my stops. A lot of people ask me, do you trail your stops? Like if you get in a trade, do you move your stop up? Answer is no. What I do is I take profit once it gets to a certain point, and then I leave it at the same point. And I'm going to show you 2 examples of why that is, for me, the best thing to do. As a trader, you got to make your own rules, and you got to stick by them, but I'm going to show you why I don't trail stops, because I operate under the fundamental thesis that I want to trade off support and resistance levels. And if those support and resistance levels are true, they are going to stay true. They are going to continue to be true. They're going to continue to be valid. So on Ethereum, we had this period in time from the beginning of 2024, through about the summer, and it created a time period where there's just a lot of back and forth trading. But what this volume profile indicator does, and it's over here on the left-hand side of trading view, I like to do the fixed range volume profile. There are indicators that you can add that add month and week and day and things like that, but I want to look at periods of price action, and I want to use that to do my volume profile analysis, because that's what I want to really analyze. Where was the most trading done in this particular time period? And then what I do is I kind of draw a line that extends out to the right, and I'm going to look for it to show some confluence. And the trade initially happened on the 30-minute, which was in conjunction and confluence with two other indicators that I use to find trade setups. And number one is Fibonacci as a 50% retracement, only a Fibonacci of 50. I don't really mess around with all the rest of them. And then it did a little spike here, a nice little volatile spike, which set up for the entry. And so that gave me the indication that I needed. You're going to watch price where it hits it, holds it. I like that right there. I like it when it shows that there's a bunch of buying that happened at that particular level. You can also see where this level functioned as resistance back on November the 25th. But here this trade is on December the 3rd, and it worked out quite well. So onward it goes, we go up. I typically want to take some profit as it goes to that high, maybe a little bit higher, but then I'm going to leave a small contract on, or a little bit of a position on, and I'm going to keep my stop essentially the same. And you're going to see why in just a second. So we basically got in on right about here on this little second dip, all right? And a stop I'm going to keep below the low with a buffer, and my initial is going to be about a 3-to-1, which let me get it up to there. It's just barely above there, yeah, about a 3-to-1. That's what I'm going to look for to start the trade. And then I think I took a profit at, I think it was, I also look for a volume profile here. I won't get into this detail, but I just want to be consistent. Yeah, I think it was about 3,900 was where I took my second profit, and then left on a little bit more, okay? And so goes up. Yay, we're happy, we're happy, we're happy. Maybe it's going to go up, make a new high for Ethereum. Maybe it won't. Well, it doesn't. And Monday of this week, we had a major sell-off, a big liquidation on Monday. But where did that, watch where it goes, right to that level, that volume profile level. Even tries to do a second test and can't quite get it. That's the power. That is why I've fallen in love with this particular method of study, this indicator, and why I don't trail my stops, because that support, it worked once, it worked twice, it worked again. I've been asked this week and follow up, do you think it's still a good buy? I'm not going to answer that question. That's for you to answer. I just want you guys to see how powerful this level is. Because last week I talked about the trade, talked a little bit of analysis, but this is just going to be about teaching. No analysis. There's one more I want to share with you as well, and that was a trade from today on S&P 500 futures. Now I like to cook. I like to smoke meat, and I have a party to go to, which I can't be very long with this. But I started it this morning. I'm smoking a big beef brisket. That's what I like to do. But I woke up this morning to do just that at about 7 a.m. And I do not typically trade in the early hours before the market open. 9:30 to 11:30 is my sweet spot for trading. However, since I was up, I was watching the market, talking to some friends, and I noticed that the trading range from Wednesday through Thursday, basically 2 days prior this week, had set up a volume profile on the S&P 500 futures at 6,083.50 cents. Okay, and then as I'm sitting there watching it, sometime around it's around 8, I think it's around 8 a.m., something like that, I got a little spike of it like that. Okay, now normally I would just be like, okay, that's cool, but that's interesting. It's right at that key volume profile level. Wow, okay, that's cool. In addition to that, I also looked at the same time, and NASDAQ, well, we can't show, I think, when time the time thing. But Nasdaq also was getting kind of spiky, and this was kind of a gut trade. I mean, this is I say that, but it's based on volume profile. But like I said, I was up. I might as well get paid for being awake, and so I put an order out there. And my target is going to be something I wanted to go for, like, again, a 50% retracement typically. And so I did a little 3 contract spread like normal. Took a short, just need a little stop above the high. And again, we're playing off this volume profile for the last 2 days. It's a 5-minute chart. I didn't say that before. And we got down, and we got down to profit. Okay. Like I said, I like to take the profit, and I don't trail my stops. Now, as it started coming back, here's how I managed it. I did as it went up. I'm going to go slow. I did as it went up. Did this right here. I closed my second contract because I didn't want that much more risk. I was like, you know what? Let's not make this into a full round trip break even. So as it's not just breaking through that level, I'm already out 1. I'm out 2. Nice profit, profit, and then left it on. And then I went to go, do some food prep for this evening. And I come back an hour later, and I see, huzzah, again, holding that volume profile level. And about around 11:30, I think I finished it up at the low from yesterday, or excuse me, the lows here. So close the last contract out at this area right here. Again, what I'll do, another little volume profile use. If I want to find a profit target, I would look for basically what's the most traded level of a low or something like that. And so I got the last contract out at 6:05175. And so that is another example of a double multiple hold on volume profile again for the last 2 days of price action. And that's why I love this thing, because it really, really revolutionized my trading in 2024 when I discovered this. Actually, it was discovered by some friends, and I was resistant to it. I didn't want to start using it. I wanted to keep things simple, but I had to add this to my trading lexicon, and I love to teach about it to maybe get through some other people's heads that they need to be looking for it too. So hope that helps you guys learn about it, and have a good rest of the year. Trade wisely. All right. Oh, better mute that. Okay. Well, we also have another that is a little too late to take advantage of now, I think, but this is LLY. This is a stock, full disclosure, that I have owned. I've owned Eli Lilly for, hold on. Yeah, I've owned Eli Lilly for decades. Like I've probably had this for, this is one of those stocks that you don't hear about on the news. You don't, I might be lagging a little bit. Oh, because it's uploading. That's what's happening. Okay. Bear with me. We're almost done with the upload here. All right. Okay, we're green now. All right. So I've had this stock for a long time, probably back since 2010, 11, 12, 13, and it's one of these things where it's you don't hear about this, but it looks like a cryptocurrency. I mean, Eli Lilly is kind of like, it's another one I've had for a long time is Waste Management, and Costco. I mean, these are just winners. I mean, this is the kind of stuff that you want to own, guys. I know I'm saying it now, late into it, but I like winners, okay? And I've been I'm kind of upset with the news. I should have pulled this up beforehand, but I just remembered it. About middle of the year, I remember some news articles coming about how Eli Lilly was like super bullish because of some drug that they were going to be releasing, and it pissed me off. It pissed me off because I know it was about like this. I'm serious. It was right about here. It's when the chart looked like this, and you start seeing news articles about how something is super bullish and you need to buy it now. Oh, what are they doing to one of my favorite stocks? I knew exactly what they were going to do. It was like a media pump by hedge fund or Wall Street or something like that to do that and basically kill the run. I mean, that's when they start writing news articles about how something is just the best thing freaking ever. Hold that thought for a little bit later. That is a coordinated effort to get you to be exit liquidity for the people that are being paid or paying to write those articles. That's I've seen it so much over the last many years of trading and following markets, and it's just so consistent and so oh you gotta pay attention to these things. Anyway, I still have it because my buying cost is all there. But in this, uh, member of the Discord, actually, good old Simple G. He's been one of my best students, I would say, of following this, and he caught me because I wasn't actually looking at my spikes this morning. But that being the trigger, the spike for this morning, 9:30. Uh, this is what comes up on when I typically do a Thinkorswim scan, but if you're watching it, there you go. Nice spike at a 50% level. That alone is good. That alone is great. That alone is enough to make me take a trade. It's also at a gap, right at a gap level. I made a post about this on Twitter and all the kind of stuff, a trading view post basically. Hopefully people see and pay attention. Then if we go out, yep, we're going to find it as a volume profile point of control for basically the whole last year, going back to January of this year. Basically, if we take all the price action of 2024, all the things that frustrated me about the news articles, et cetera, it basically came back to this little first quarter consolidation period, which is where most of this trading happened. And it's already been tentatively defended once back here in August. And then here again, did a little bit of a around here, but we've got a tradable setup here. And because I've had it, because I'm bullish on it, I threw some on it today. Great find by Simple G. That's why I love to have. That's why I like to teach. That's why I like to teach so that people can check me when I'm not looking, because I can't watch every single stock all the time. But this was another great example, live example, not just a here's what happened in the past kind of example of volume profile. And there's been many of these things. The homework I'd recommend for everyone to do is to go back in time, go to some stocks that you really like, and look for volume profile levels and see how often you can find. Trying to remember, I think Met is one I've been watching for. No, that's the main example right now. Let me look at Tesla real quick. Tesla, as you know, this week hit 420 again, and yeet. I feel bad for people that closed out of their Tesla shares because they no longer favor Elon. So anyway, all right. Well, that was the lesson for today. I got to record it. I want to teach. Like I said, depending on my holiday travel, this might be my last live stream. If you got questions, go ahead and post them in the chat for me. I'll look at them, and symbols to look at for the last half. And I'm going to let you guys put that in. Oh, it's 11 p.m. there? Okay, well, let me do yours real quick then, Mr. 1000. AAVE, he requests. Oh, that's probably crypto. Okay. In a situation like this, typically, volume profile I'm going to use for pullbacks, okay, to buy into it. And so, and possibly for profit targets. So we can do a volume profile of the past price action, but it's going to be down here, okay, because that's where a lot of the trading happened down here. All right, and so this was a lot more thin up here. And you've already surpassed even the highest point you could find here at 321. So this thing's just in a tear, man. It's whenever you feel like you've made enough money, okay? All right, chain link. What I would look for is if you wanted to buy more, if you wanted to get into it again, then you would want to go from the bottom to here. Let me just add that to that. And I would look to see, okay, where's the volume profile? Where is the level for this trade as it is? And still pretty low. So I would probably look for a 50% retracement. 231 would be it. But yeah, I mean it's just in a tear right now. It's just going up. Um, chain link. Was Link USD? Yeah. Okay, we'll use Binance one. Again, like all crypto, going nuts. Although there is a good bit of little. Let's just see what in here what we got. All right, so that's already come up to this level right here, 27. Okay, notice how it did initially respect that level right there. So that was a possible tradable level. That's interesting, isn't that? So again, if we go and look at the most of the trading that happened between the 2021 January 2021 and through basically the year of 21 through January 2021 to January of 2022, we take this on the daily chart, we can see how that level worked for a time for a potential profit target, but it beat it because it's bullish. But that's just really cool validation of it working right there. It did respect it, but it's just so bullish that it pushes right past it. So cool stuff there. So, yep. TLT. TLT is interesting. I'm not as it is an ETF. It's very gappy, and it's I haven't really found very much use for volume profile on it. Its volume profile is already above it. Yeah, see, it has a lot of gaps in there because it's based upon, it's an ETF of treasury bonds, and they trade 24 hours. And so doing volume profile on ETFs is not nearly as effective, I found, on doing it on more liquid instruments like, futures or crypto or stocks themselves. So, yeah. I mean bonds. I mean, I think it's. I don't know. Last year, I thought bonds were going to have a big, giant resurgence, and they didn't. It's just kind of hard to say. It's kind of hard to say. I don't have an opinion this year on bonds so much. I have a lot of. I have bonds, and not a lot. I mean, I've got a portfolio allocation in bonds, waiting on the sidelines for a big pullback in whatever market that I want to buy. But yeah, right now I'm just pulling about 5.75% locked in for 10 years on them. Pretty liquid. I could get out of them if I needed to. But TLT, I just don't see anything really particularly going on. Palantir, I had to I own about like 200 shares. That's it. Because I bought them last year. No, I bought them in the single digits of in 2023, early 23. I've had it almost 2 years now. I really just bought them because friends of mine were super bullish on them, and of course you always wish that you had more, don't you? And so yeah, I was like, I'll throw a few hundred. I thought for about it was I think I threw like maybe 1,000 into it at the time. So that's what two and it was like $5, yeah, something like that. And so yeah. And so no, I wasn't. It was maybe $500. Anyway, you always wish that your winners were bigger. Anyway, so yeah, bearish spike. Let's see. It is, but Wolf, these kind of spikes when they're just kind of in isolation, when they don't really have like a past high or low, or they don't have uh, a volume profile level, if they don't have any past price action, they can really just sometimes be volatility. I mean, I could probably go on Nvidia here, and again, Nvidia did something kind of like that too. So yeah, it can end. It can end in a little bit of a pullback. You're right. You're right. So it is kind of a warning sign. You're absolutely right because Nvidia did one in March. Nvidia did one in Thursday in June. Yeah, it's a daily chart. I think it's and then actually Nvidia once again is giving me a little bit of concern. Now I own Nvidia, by the way, full disclosure. Again, it's another long-term owned stock. I bought this back during the pandemic, and I've held it ever since. But yeah, a couple of friends of mine took some puts on it today, and I really wanted to join them. This was at the open when it was actually up on the day, because I've been getting very, very concerned about Nvidia, and it had a very, very clear bear spike right there at it basically 150 psychological level ish. You got the highs up there, but it just, and that was actually a valid spike. This is more what I want to see, Wolf. I want to see a spike like this where you have that kind of the price starts to kind of stabilize. You poke above it. I mean, that's exactly what, I'm playing off of with Bitcoin, actually. I mean, last week, I talked about how I think the party's over based on that spike, but man, they keep on trying to keep it alive. That's what I'm going to talk about here in just a little bit. But yeah, I mean, you're right. You're right. It did spike out, basically came up, slammed back down, but there just doesn't seem to be very much structure there. However, it is indeed a warning sign. It is hard to say though. That's not necessarily when I would short. Let's put it that way. That's a better way to put it. I wouldn't short this, but if you want to take profits, I'm not going to be mad at you. Does that make sense? Yeah. So as a pure signal, I'm just gonna let it be. I'm not gonna change my position. Although, given that I have some multiples of 100 shares, I might want to start trading some options. One second. Let's see what the IV is on this. I always want to buy options, single options, when IV is low. And actually, this is the indicator down here for IV. It basically shows IV relative to the last 252 days, basically the last year of trading days, and it's about average. So that's actually pretty good. That's actually pretty good for buying puts. The reason I really wanted to, and I probably will start looking to get into it maybe next week with Nvidia, is IV is extremely low. Actually, it's some of the lowest it's been. It's an IV rank of 22, which basically means that only 22% of the last year has had higher IV. Of course, when you had this big dip, back in August, that was big. Then you had earnings in August, and that really slammed IV. And now it's just very, very low, definitely below average, which is about 52. And of course, this is across the whole chain. But the general premise is this: if you're going to buy options, you don't want to put yourself at an immediate disadvantage, because theta decay, time decay, is already going to hurt your options. You want to buy them when the implied volatility, the overall pricing, the tide that lifts all the boats, the options being the boats, is low, such that if you have a big crash and you're in puts, not only do you get the benefit of the delta, but you're definitely going to get a flush of IV that's going to lift your options even higher in price. And that's just a really good situation to be in. So I'm really, really liking, haven't done it yet, maybe a next week thing to look at. May have missed my opportunity today, I don't know, but Nvidia is starting to get kind of interesting to short. More interesting to short, I think, than at any other point in the year, because at every other point that it did these spikes, notice how IV was pretty high. And I've kind of held my hand and not shorted Nvidia trying to be a contrarian. Excuse me, not shorting it, buying puts, because I have the shares. It would make no sense for me to sell them and short it, but details. But yeah, I'm actually getting kind of interested in that. But yeah, Palantir, yeet, big old yeet. All right. What else to talk about? SCHD, that would be, if I recall correctly, that is the dividend ETF. Well, that's going to be, I have SCHD in my portfolio, and I've not been very happy with it, because it does over time tend to underperform the just a general index ETF. Let's do, if we look at just VU, the Vanguard, the lowest cost index ETF. Let's do it weekly. I can't even see it on the chart here. It's outperformed it by so much. Hold on, why can't I? Why won't it let me redo it? Let me fix this. Hang on. No. I don't know why it won't let me do that. Let's do this instead. Let's start with VU. It used to be pretty simple to do this. Yeah, that works better. Okay, so there is your Vanguard ETF versus your SCHD. Now, what's not calculated in here is, of course, the dividends if they're reinvested, which would probably give it better performance as opposed to just the straight performance. But the thing about dividend stocks that you should know is just kind of cursory knowledge is that they tend to be established, safe companies, blue chips. Oh, I shouldn't say safe, that are paying out dividends. And there's this thesis when you look at stocks that says that a company that's paying out dividends is not spending money on R&D, research and development. They're not taking that money and building more factories to make more stuff. They're giving it to the shareholders, which is good for the investors, but not good for growth. Whereas growth stocks, your tech stocks, things like that, they don't pay dividends. The benefit you get from them is from the appreciation, the capital appreciation of the stock. Nowadays the speculative benefit. So it's good. Definitely good if you need to earn dividend in your portfolio, but it's not just an all-around be-around thing. I would, you mix it up with just a regular index ETF, or combine it with QQQ, which, yeah, actually, that's up 56% versus 24. That's up 54%. Actually, there's no difference between QQQ over the last, this is 3 years. Let's do the 1 year performance. Kind of look to 1 year. Let's go back to the beginning of the year here. Roughly. Yeah, okay, so 1 year performance of VU is 28%. The 1 year performance of SCHD is 10%. In a normal year, 10% on the stock market is above average. We're in crazy times right now. We're really in crazy times right now. And versus QQQ, which is up 29%. Okay, so it is what it is. I mean, they're about the same. So, yep. MBG, Mercedes-Benz. Ooh, which one? We'll try that German one right there, and let me take off SH comparison. Not sure if this is it because this is not an American traded stock, but looks like it's kind of going nowhere. It's a little late, I think, to try to jump into the Tesla train, but I will say this though. The reason I bought a Tesla was because I drove a Mercedes. A couple years ago, I took a road trip and I drove a Mercedes and I turned on their driver assist feature and I loved it. It was actually very, very good. Made the drive super pleasant, like you would expect from a Mercedes, but it doesn't go where you want it to go with a single click of a button like a Tesla does. And yeah, so Riot. Well, let me. This is going to be the only cryptocurrency I look at because I'm gonna start kind of wrapping things up because I got to make sure that I'm not overcooking my meat. But yeah, it's going kind of nowhere, and you would think with all they do with Bitcoin, they should be getting some kind of a benefit. What the hell are they doing wrong? What are they doing wrong? Marathon has started doing exactly what MicroStrategy is doing. Looking kind of the same. Marathon started doing what MicroStrategy is doing, which is taking out. Actually, they're issuing. They're doing. I think. I don't want to quote this wrong. They're doing some kind of financial engineering to buy more Bitcoin, just like MicroStrategy is doing. And that's what I kind of want to talk about today as I kind of close up a little bit. Why I've been getting kind of frustrated with Bitcoin. I think I might actually just stop talking about it. I was talking to a friend today, and he kind of put it into perspective for me. They basically, the new Bitcoin Jesus is Michael Saylor. And Michael Saylor is active on CNBC trying to get people to buy his bonds so that he can inflate the share price of his company so that he can dilute his shares, so that he can buy more Bitcoin, so that he can pump up the price and make the share price higher, himself richer, and everyone that owns Bitcoin richer. One of the largest institutional holders of MicroStrategy is, of course, BlackRock, and I think also Vanguard. Um, Makes sense. Basically, Bitcoin has reached full adoption by Wall Street. It's now Wall Street's pet. That's why you see so many bullish articles about it on your news feed, on your Twitter. Is because they want you to buy it from them. They want you to pump up the price for them. And the old Bitcoin Jesus, Roger Ver, who I talked about in a live stream a couple of months ago, he did a Tucker Carlson interview very recently, and he talked about the things that I really felt were important to cryptocurrency, which were the ability for people to transact outside of government and corporate control and censorship. And of course, that leads me to talk about my favorite cryptocurrency, the only one I really care about, which is Monero, which has been undergoing some crazy volatile swings. I'm basically right now, all these lines are trying to figure out where the range is, because I used to tell people buy it at 140, which worked for the better part of all this year after this little sell-off that happened when it got delisted for being too private. In other words, working as intended. And I think some manipulators decided to play around with the order book, and now they've established a new range, and it could be anywhere from 160, looking like 160 up to 220. So what I want to see in cryptocurrency is what Monero does, for it to be used, for it to be secure, and for it to more or less hold its value. And that's what Monero has continued doing. And I don't like to see it up 20% in a day, believe it or not. I'm serious. I don't want them to mess around with Monero. I want it to be a true cryptocurrency. But I don't get to choose, and I don't control the price. And that's really the thing that I've kind of settled on. I'm in a short position on MicroStrategy and Bitcoin. We're going to see how it plays out. It hasn't stopped out yet, but I'm getting kind of tired of it, honestly. I'm getting kind of tired of trying to stay informed about it and just hearing tremendous amounts of arrogance and you're going to be sorry, have fun being poor, etc., etc. I've dedicated the last decade of my life to good trading. And there's no point in trying to trade something where people are going to be just constantly pumping it up. You just buy it and you hold it. And I guess that works. But I just can't help but have this bad feeling about all the bullshit around it. When I hear Michael Saylor talk about this financial bullshit that he puts out there, like earning yield and selling volatility and things like that. I mean, it's just the telltale signs of a Ponzi scheme. It's not a Ponzi scheme, but it's a scheme. It's not fraud because it's out in the open. And then he's roping all these people into it by saying, oh well, this is the only thing you need to own. And I've just heard this so many times before. And if you go back and you read the history of the financial markets all the way back to, not just the dot-com crash, but, the 1929 crash where everyone's just rushing into things. A lot of people are throwing a lot of their life savings into this stuff. And right now it's good. And it may continue to be good. I don't know. But it's stressing me out watching it because I know better than to go jumping in. I just know better. I'm good. I don't need to get a 10x. I don't need to risk a bunch to get a 10 bagger. I don't. And so but I can't fully say that I'm good because I can have really good success, like trading futures like I did today, or trading an Ethereum trade last week, and then be comparing myself to people that just sit around and read the news and do what it tells them to do, which is buy and hold Bitcoin. But that's a personal problem. But I want people to be careful, and I want people to have good decision making when it comes to trading and investing. And the narratives out there right now are to throw care to the wind, and these things only end one way, and that's badly. But I don't know when. You never know when. But I just got a really bad feeling about it. I really do. But there's no really apparent reason to back that up rationally. because what they're doing, this infinite money glitch, they're using clever game mechanics, as we used to say in World of Warcraft. Yeah, clever use of game mechanics. It's not an exploit. It's in the game. You just found a way to use it to your advantage, and that's what they're doing. So, can you send me $50 to Solana? I like and subscribe and send good wallets to copy. No, thank you, Isaiah. No, thank you. No, that's good. All right, guys. Well, thanks for listening to that rant. I hope you learned something about volume profile today. Um, I will try to be back again next week for one more for the year, but I may be traveling. We'll see. You can check the links below on Discord to see the trades as they happen and when I post them. But yeah, until then, trade wisely, and we'll see you next time.